Hey everybody, and welcome to another episode here at Tribal Trades, the daily show coming at you from the great state of Florida. One hell of a drug. And I do want to welcome you to the channel wherever you are tuning in from around the world. Thanks for watching. Today we're going to talk, is the drop over? Was that it? Was the big flush out on Sunday, the big drop? Is there more to come? Can we expect sideways consolidation for a bit? And are we out of the woods and going to take off like we normally have seen for February and past post-halving Februaries? We're going to talk about that and a whole lot more. But before we do that, smash the like button. This does help get this channel out to more people and does help support the channel, as does your wonderful comments that you leave. You take the time to write it. I take the time to read. Thank you so much for that. And of course, those who ask questions in the comments section, I do get back to those as soon as I am able to. However, if you'd like more immediate engagement, you can find me in the Tribal Trades Discord, one Discord to rule them all. And there are information below in the description of this video. This is a limited, invitation only, exclusive Discord trading and education experience, and you will need to email me. There is an email below in the description of this video. You might need to click the more button there, and you can email me and ask to be on the wait list. We are admitting people every day, but this will stop this week. We will close it off, and then the Discord will be closed for sign up. Is that something that you're interested in or would like more information on? Just email me there below in the description. And of course, I'm still in the Stocks with Josh Discord with my own Crowned Traders channel in there. Nothing changes there. Of course, was posting there yesterday and the day before as we navigated the buy zones for the latest drop that we had on Sunday. And of course, I'm in there sharing education, insights, resources, some of my trade setups, and of course, entertainment, because I'm not a financial advisor. This is not financial advice. This is for education and entertainment purposes only. Are you not entertained? Okay, so we're going to jump right in to the show. And of course, we have a little bit of news, and the news is that BlackRock, while people panic sold the dip, BlackRock scooped up 2,520 more Bitcoin and only 450 were mined. There's definitely leading to a supply shock there if this continues. Also, we had the press conference yesterday from David Sachs, and it was built up to be something quite big, and it turned out to be a bit of a buy the rumor, sell the news. And I did warn that in the Discord that this was likely going to be the case, and those who were therefore prepared for it were able to profit from that, of course. And so he did say that it's possible that the Sovereign Wealth Fund would include Bitcoin or a possible Bitcoin strategic reserve, and that is one of the first things that they are looking at, okay? Now, we do have some bearishness for Bitcoin on the monthly chart, printed a shooting star candle signaling a possible potential. Remember, these are also possible and potential trend reversal. The Crypto Crew University says to nullify this bearish sign, Bitcoin needs to close above 108K by month end. And I would say this goes along with my thesis, is I'm still expecting Bitcoin to make a new all-time high. And I've said this many, many times, make a new all-time high by the end of February, which of course would push it above the 109K area there, okay? So I do think that, and a lot of people are saying they don't see a bear market coming for Bitcoin as normal, and this could quite be possible, that Bitcoin may not go into a bear market or what we've traditionally seen as a bear market. We might see some of those big drops. You know, we saw a big drop from 73,000 to about 49,000 between March and around September, October last year. And we might see those kind of situations, but whether or not we see big 80% drop like we have in previous bear markets, I don't think so, because even historically, the drop for Bitcoin has been less and less. The last drop in the last bear market of 80% was its lowest ever. So we might see more of a 40 or 50 or 30% drop. I'm not sure. However, altcoins, I believe, will still have its usual bear market and will drop below 90% in value, as usually happens. We'll cover that a little bit in the altcoin show there. So let's look at the charts here for Bitcoin. Okay, so as we can see here with Bitcoin, this was the line that I identified on Monday's video. Okay, Monday's video, this is the line I identified, this double Fibonacci. This is a double Fibonacci line. We've also had a little bit of an issue with the 50 EMA, the 20 EMA on the daily there. And as you can see, this has been a key level that we have been attempting to stay above and clear above that, make daily closes above that level. And even though we've shot into the 100K zone and made highs on 3 consecutive days of 100K, and really if you count all these days here, but I'm just talking about since we had the big drop here, you can see that there was some drop down that we saw. Now, I've always said this 100-day moving average, that would be key. And of course, we found that, hit that, went below that, but we did not close below this. Now, one of the things that I have said and I have been saying is this wick here. Now, this wick here on the 13th of January this year, we had a low of 89,256. And what I said is generally these wicks will tend to get either partially or fully filled. And what happened? We came down and we partially filled this wick. But in doing so, we created another wick. And this is what I warned about, that these generally tend to get partially or fully filled. And what happened was we had a drop down and we partially filled some of this wick here, not a lot. Now, I wouldn't be surprised if we come down and test this here. I'm not sure we'll fill this entire wick. I do think this low, the Sunday low, is generally come in on the 1st or the 2nd. One of the post-halving February's was on the 9th. And so, yeah, there is a possibility that we could take out this entire wick, okay? I think the most likely scenario is this, will be the bottom for February. And of course, things can happen. We could get another black swan event, because this dump was the biggest liquidation dump in the history of Bitcoin in 24-hour liquidation, surpassing FTX and the lunar collapse and other events that have happened in Bitcoin history. So this was quite a severe drop to the downside, far more even severe for the altcoin market as well. We saw a lot more dip down from there. So what I could see, if we are going to see some more downside, and we are struggling right now, we are basically testing this, retesting this from below. So this rejects here as resistance. That could bring in now some of these other levels here to the downside. Of course, we have that 96,000 level and the 95,200. And then we come into this level here, which is going to be sitting at around 94,600 at the moment, but it is slowly moving its way up. So a retest here would not surprise me. Okay, I would be surprised if we took out this entire wick. Now, to the upside, if we break above, we have the tribal trades trend line, one line to rule them all. And so we have seen that this line here is a line of support and resistance. And this is coming up. We've got the 50, so the 20 EMA on the daily there. We also have the 50 EMA on the daily, and that was resistance there. You could see that it touched there. So I do like having the 20 and the 50, because you can look at different time frames and these lines move around, as does the 200 EMA. And you can see these three are all providing resistance on the 4-hour time frame. That's the importance of moving around the different time frames and seeing what is going on. Of course, a break above the 20 EMA on the daily would be significantly bullish, as would here. But what we've seen is we're getting stuck really between, we got stuck a little bit between the 20 and the 50, and then we broke below it. And now we're beneath, we've got resistance to the top at 98,800, and we've got support down here looking at this immediate Fibonacci line at 96,300, and there are two more. So I like playing it to level. So this one here is providing support at the moment at 96, and then we've got resistance here up at 100. So we are right now trading back in the lower range of that $90,000 to $100,000 range. And we are trading in the top part of that range right now. Around the top part of that range, we've got that 96, 95,000 to that 100,000. We're really struggling there. Now, this may just be a deviation, because we did spend some significant amount of time in this new upper range between 100 and 109, and now we are seeing a little bit of a deviation. Now we're going to see if we were to come back down and then we're really now back trading in this range. If we come back down to the bottom and then we're back in this range, and this was a larger deviation here. Now let's look at the yellow brick road. Follow the yellow brick road. Follow the yellow brick road. We're off to see the wizard, the wonderful Wizard of Oz. And I know you all like this. We shouldn't have to depend on this as an indicator. I don't use it as my sole indicator. We didn't have to rely on it as any kind of indicator that these liquidations back down here at 96,000. This is what I was just saying before, that we have seen that wick and pick up on that. And even on Monday, I showed how 96,000, again, there are more liquidations there, and there are liquidations to the upside at 100,000. So you can see that we're trading right now in this liquidation range between 96 and 1,000. All they're doing, the market makers, are bringing the price down to 96 and bring it back up to 100. And we've seen that over and over again. And this is why this can be so useful to bring confirmation. Again, there we've got 96 and we've got 100. So we keep zooming out until we see something a little bit different on these bigger time frames. Not much to see there, except you can see these liquidation levels get taken down at 96, and these ones that got taken out at 100. If we zoom out to the weekly, we might get a little bit of a bigger picture view and see there is a lot starting to build. This yellow area up here, again, where is it at 106? And we've got some there at 103. So I would think at some time, unless they plan on leaving all of this behind, that we should come back at least to the top of that range at 100K like we saw in the earlier ones, and push into the new upper range there as well. As we zoom out to the monthly, that's when we start to see there is a lot of money up there at around at 110,000. And this should push us over for a new all-time high in February, okay? And then if we go out to the 3-month time frame, I'm not sure if we're going to see much more there. Yep, there is there at 110. So we really can see, if we zoom out on the shorter time frames, we're seeing that move between 106 and 100. Of course, if we do start to drop lower, there are lower liquidity levels down there, okay? We see this big liquidity level down here at 90,000, okay? If we can just take it about 124 million, that's just on one exchange there. So that's how we kind of, if we come back to the charts, and this is why it's great to come back to the charts and have a look and say, okay, from the shorter time frame, we're seeing support at 96. Well, lo and behold, that's where the liquidation levels are. Wonder why it's bouncing from there. And then we see more liquidation levels at 100K. And this is where we're seeing this candle hit. So if you wanted to swing trade this area, if I wanted to swing trade this area, then I could look at putting in here at support, and then selling up here at resistance at around 100K and trading these swings from 96 to 100K. Now, I want to make sure that this is held. I don't want to try and catch a falling knife. So the way I would look at that is I would go to the 15-minute time frame here, or even the 5-minute time frame, and make sure this holds as support. So we come down here, we're not going to see it, but you can see this is held as support. We've retested it as support, and it's held on the 5-minute candle, and that could be a place to enter a trade. Even at 98, trading the swing from 98 up to 100. Now, if this goes below and we see something like this where it comes up and rejects, then would not get in the trade, would get out of the trade. So you can see how this here goes down below. You could enter the trade here, but then you stop out. As soon as you see a 5-minute candle below, comes up, retests as resistance, rejects, out of the trade, and you can actually get out of the trade at break even. That's a great stop loss strategy that I use. Or of course, you stop out at the place where the most amount of money that you would like to lose on the trade. And if that's $100, then you put your stop loss where you don't lose any more than $100. If that's 50, you put your stop loss where you don't want to lose any more than $50 on the trade. And so that's how I would play that. Of course, this move could take a day to play out. from 96 to 100, you could come down and you could play this and you could get in here and using that strategy there and then look to take profits up here. This could take a day or a number of days to do. So that could be a longer term swing. We did a lot of scalping yesterday in the Tribal Trades Discord. I'm going to talk about that more and the coins that we were trading in there in the altcoin show, which is coming up. So until then, or until I see you on the Discord, happy trading.